Good morning, everybody. We'll get started in just a minute. It'll be a little bit quicker today. So just make sure we are streaming, and then we will be starting here momentarily. Oh, here we are. Perfect. All right. Great. Let's get going. I'm going to try to keep this to our usual sort of 10 to 15 minutes, maybe on the shorter end this morning. Good morning, everybody. This is our Set the Market morning show. I'm Serge Berger from the Steady Trader. If you're new, welcome. What we do here is we go through some of our top of mind market thoughts in the morning. Again, sort of specialty here, or we pride ourselves on being able to do this in sort of 10, 15 minutes as opposed to babbling on for too long without getting anywhere. So let's get started. And the top three things are going to be in following. Let me update you guys on the December micro seasonality. We started talking about this last week, I believe on Thursday. And sure enough, it's starting to kick in. If you saw yesterday's price action, speaking of yesterday's price action, we are going to continue to look at that with the outside reversal days we had yesterday. And then I want to share with you a chart on the consumer, which I think is very concerning. So let's start off with what's sort of number one. And again, that has to do with this micro seasonality. Again, I spoke about this over the past few days, and I think we are in a situation now where we can say this is something that is starting to happen. At least it has now been working for one day. That's not very long. But basically, what the chart shows us is 30 years of history of the S&P 500's seasonality between October and end of the year. That's the white line on your screen. And specifically, you can see as of around December 6th, which was last Friday, the S&P tends to start to consolidate for about 2 weeks until the 20th of December. Multiple reasons for that. I mentioned them many times now over the past few days, not the least of which having to do with economic data that comes out, and people are typically kind of taking a step back. But again, the end of the year is really, really near here. So, and then you kind of get that year-end rally. So that's what this is. And again, yesterday we saw a pretty good example of that starting to happen. Now, I'm certainly not running any victory laps here, but I do want to give you the context here in terms of what happened yesterday. So before we look at Oracle, which is down, 7 or 8% pre-market, which we'll talk about, I do want to share with you some things that had pretty notable outside reversal days yesterday. And that includes things like some of the ARC ETFs. Again, a lot of high octane, high momentum things. Yesterday down 3% after actually being up for a little bit. So this is an outside reversal day. Same thing in ARKK. This is the innovation ETF, down 2.5%, outside reversal day for the most part. Something like Palantir, which I know a lot of people are very, very bullish on. The stock at some point yesterday, I believe, was up like almost 5%. Let me see. Yeah, like 5.5%, 6%, ended up closing down 5%. So that's a 11, almost 11% move in one day, right? Again, I have nothing against Palantir. I'm just telling you, I think it's stretched, and we're going to start to see some consolidation here. That doesn't mean I have to be short the stock. I'm just warning people of the risk of it. There's easier trades to be had, in my view. So, take that for what it's worth. Outside of reversal day. Then you look at things like consumer communication stocks as a sector, as an entire sector, down 2% yesterday. Something like TTWO, this is a gaming stock, not a huge move, but again, you can see it's starting to fail at levels where it's found resistance now for the better part of the past, let's call it 2 weeks, basically since Thanksgiving week. And then this one made headlines yesterday. APO, this is Apollo Global, stock down 3%, but not before it was actually up 6.5%. So that's a 9, almost 10% move, guys. This is pretty darn important. So we see these moves taking place, and basically what it means is that there's now a lot of overhead resistance, at least for a while. And I think that's crucial. So if you're managing, your money, if you're managing trade, just be aware of some of these outside reversal days. This does not mean that one has to be short, but it's a warning sign basically. And so we have to keep that in mind. So again, this very much lines up with this seasonality chart that I mentioned, right? Again, where the S&P, and again, we talked about this since last Thursday, where the S&P typically tends to take a little bit of a setback or a consolidation period between December 6th and the 20th. And so I think we saw some of that yesterday. Tomorrow we have CPI, that's an inflation reading, and that is going to be, I think, the most important next data point until we get to the Fed next week. So those are 2 points. So basically, if I was long Palantir, if I was long any of the things I just mentioned, I would want to at least respect the fact that we had a reversal day. Because if you think about it, what does it mean? So it doesn't, and I'm not trying to pick on Palantir. That's not the point at all, right? I actually think there's a lot of potential future upside still. But when you have an outside reversal day like that, and again, that's a big move. Let me just remind you, the stock at some point yesterday was up almost 6%. It closed down 5%. So that's an 11% move. That's big. It's important. We have to respect that. So someone up there yesterday, someone of meaningful size, be that, a BlackRock, and I'm not pointing at them, but I'm just saying someone found it appropriate to start selling some shares, right? Potentially a lot of them. And then, of course, the algos jumped on top of that. So the question is, is one as an individual trader smarter than some of these other people? Maybe, probably not, but maybe, right? So I think just as a risk management exercise, this is something worthwhile. Now, let me get to the third thing, and I think this is also something that one would be wise to respect. We have a lot of positivity out there, and there's a lot of reason to be optimistic, I think. However, this chart has now been out there for a couple of days. This is basically a Deutsche Bank research piece, and this is combined with a study from the Conference Board. And basically, going back to, I think this is the mid-'80s or so, the dark blue lines, what you want to focus on, and you can see it summarized up here. U.S. consumers have never been this bullish on U.S. equities. Never. Like, as in ever, at least since this has been measured. That doesn't make me want to jump out of my own shoes, right, and start doubling down on some of these high octane stocks. Okay, so keep that in mind. And of course, that's very divergent to the light blue line, which is income expectations at the same time, right? Again, this is to me something I would be concerned about for next year. We do not expect next year to be another blowout year for stocks. We expect next year to be a year for trading. A lot of two-way price action, a lot of opportunity, and again, that's why we like to have a process that is that focuses on multiple time frames. Imperial Republican is asking. This is the screen name, by the way. Did we see any of those moves in the trender? I'm not quite sure which moves you're talking about. But yesterday, but yeah, for sure. I mean, do you mean like yesterday's intraday moves? Is that what you're talking about? If you are, I'm happy to show you. Let me quickly bring it over. So, for example, yesterday's move in Palantir, I mean, I think this should speak to it, right? We had an initial buy signal, and that ultimately got stopped out really quickly. That got stopped out for a loss of about 3%. And then we had a sell signal, and that one reached all the profit targets, 5-6%. So I guess the short answer is yes, Imperial Republic, and hopefully that addresses that question. So that is a very short 10 minutes here today, but again, to quickly recap, yes, the trender got these moves yesterday. So that's number one. Yes, our micro seasonality part in the S&P 500 is so far working. We talked about this last week. Again, this is the white line 30-year history. Yes, the consumer is incredibly bullish stocks. The U.S. stockholder, that's different from the U.S. consumer. That will likely be something to be aware of as we go into next year. Yeah, I think those are the things you want to go through. So hopefully this is helpful, folks. Please subscribe to the channel. Very important so that you get updated in real time when we do these sessions, which is Monday through Thursday. Please give us a thumbs up, like. And if you are an Inner Circle member, we're going to go through the market rover, whole bunch of good stuff starting in about 9 minutes. So we'll see you guys in that members session in about 9 minutes. Hope to see you there.